All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. There's a really common chart type out there, and it looks like this. Looks just like JP Morgan here, where essentially it's come off the lower band all the way to the upper band, which is back to the high from November, and pretty much sitting there and selling off today, not getting bought up today. A very common picture in a lot of stocks out there, and one that the short terms are very overbought. In terms of just the overall short-term indicators. And we talked about that this morning, that, we'd be looking at this morning a very overbought type position for a lot of things. But overbought doesn't mean that it's not ultimately going higher. It's just not one that you generally want to chase into, right? JP Morgan went overbought right here. Let's see if I can draw it here. JP Morgan went overbought right here, right? And ultimately went higher. But you can see the chop around and the urgency to enter, not quite there. And we're seeing a lot of that here this morning. It's one where we have very bullish sector stacks. So if we take a look at just the sector summary and how they're playing out this morning, consumer discretionary, technology, industrials, materials, financials, they're leading the way, right? And the more conservative sectors, utilities, real estate, healthcare, consumer staples, they're lagging. And so we are seeing a very bullish sector stack in terms of just the rotation of money here. But you have to kind of look and say, wait, are these actually getting bought up? Or is this just a rebalance that occurred because of the gap overnight? If we just look at the sectors individually, consumer staples is the big laggard, right? Yeah, it gapped up and it's pretty much sold off all morning, right? Pepsi, helping to drag that down. Coke, really dragging on them in a big way. Utilities, well, they gapped down this morning. They were one of the few sectors that gapped down. They've actually seen more buying pressure today. So while they're lagging, they've actually seen more buy pressure than sell pressure. Healthcare, this one's seen more sell pressure than buy pressure, but not exactly a big mover here today. Right? I mean, it had a big move last week, but really kind of lagging. But then we get into the banks, the financials. It's been mostly sell pressure today so far. Tech, the XLK, mostly sell pressure today. XLY, consumer discretionary. A little bit of sell pressure, not a ton, but not getting bought up. And we're seeing this across the board where things are not getting bought up. They're really mostly selling off here today. And so yes, the market is gapped up. Yes, the market is green. But overall, there's been more selling in the first hour and a half here this morning than buying across the board. And, you look at something like IWM, it's about to go negative. It's about to go red here. And, this is something where, is this due to overbought? Or is there something, a little more dramatic coming in terms of a pullback? And I think both have to be realized. Both have to be, accepted as possibilities. And, it is something where there's still a long way to go today. As I mentioned this morning, I'd be looking at S&P futures charts to see if there's any kind of volume coming in that would mark key levels. And you can just see, as I've been talking here, we finally have had a 20K volume candle. But this isn't on, it's been selling, so, find a bottom. This is on the break of these lows from this morning, which is a natural place for algorithms to have put stops. And so it does look more like stop hunting than bottoming volume here on the day. But overall, still just not a lot of signs from volumes to say, hey, you know what, a bottom is in or a top is in, and can really play off of those levels. But the overwhelming price action today since the open has been sell. It's not been dramatic. It's only 20 points, on the S&P. That's all the sell has been so far. But it has hit in almost all sectors. In utilities is one of the few sectors that's actually been bought up since the open. And so not necessarily something, I want to chase into to the upside. But have been curious and watching some of the price action. Energy has been a little bit interesting here, this morning. But, we have things like IBM about to go red. Under Armour probably going to go red. We have some big names out there. I mean, Bank of America isn't going to take much to go red, here today. And, ultimately, if they end red and you want to play for more downside, which is likely what I will be looking at if the market doesn't see a buy period here today. But I'll be looking at something like a Micron, saying, all right, can I short it off at today's high? I don't think it's a legit trade right now. I don't think it makes any sense right now, right, to do that, because the reality is we could see this 20 points get bought up very, very quickly, here this afternoon. It is still one of those where the market is, this is like trying to play earnings an hour after the market opens after the earnings, right? There's still a lot of variation in activity that can go on, but the early signs have not been too positive here. But if the market were to end, not see any sort of buy period come into it here today, things like Caterpillar could be very interesting shorts with stops around today's highs or today's open prices. Could be set up very nicely, and I will be looking at those here. But I do want to let things play out just a little bit more. I don't see anything where the risk reward is all that dramatic and great. For me to say, hey, you know what, this is fantastic. Let me go and let's let it rip here. So, but. Again, a lot that can go on. Transports, really, not getting bought up to a high degree. And then, as I mentioned this morning, the thing that makes me a little bit skeptical about this trade deal in terms of did the market overreact with S&P futures is the action in the U.S. dollar. If we were talking about the U.S. dollar trading down, a percent and a half, well, that's to me the market pricing in legitimate change. I don't think the market's really pricing in much change in terms of how it views the trade war and what's going to happen. And I make that statement based on the U.S. dollar. And so, again, it's always in the market. You always have mixtures. You always have some, bullish components. You have some bearish components. But this morning, it's more sell pressure than buy pressure and in an overbought area, but also with some pretty bullish sector rotation stacks. So it's a pretty interesting mix. One of them will give, and that could happen, within the next hours. Could take, the next, into tomorrow or Wednesday. But in all, I think the shorts have some areas that they can play off of. I think that's what this morning is built. For the shorts are some areas that can be played off of and that can be shorted. Even in the market, if you want to short the market, this little rebound high, this little kind of blip high that we had around about a hour after the market opened, shorting the market with a stop right there. That makes some nice sense. There's a decent risk reward there, and if it does go down, your option values are not going to compress in a massive way there. We are seeing the VIX pull back, back to back here to around 17, but nowhere close to the 14 or 13 levels that would be strong bull market territory here. Market is still pricing in quite a bit of volatility overall, but anyway, I take a look at Microsoft. We've talked about Apple being the canary in the coal mine in this market. But I think that's over. I think it's over. I think the events of this weekend change that and take the focus off of Apple a little bit and change things. I think Microsoft is probably the canary in the coal mine, or the switch of the canary in the coal mine here. In terms of if Microsoft's green, chances are market's higher. Microsoft red, chances are market's lower. And this has been an outperformer overall. and has held up very nicely throughout this correction. And when you think of what the market was last week, or the last 3 weeks, it's been reactionary. It's been a little more defensive. Fund managers have raised cash. And now if we're looking at a market that is kind of switching to a mode of where do I put cash into play? Where do I go and deploy the cash going into year end? Like Microsoft is that type of stock that investors are going to look at and go, wow, this is near 52-week high. This is held up very well. The fundamentals are very solid. And, oh, yeah, its growth isn't slowing like is the fear with anything else. And if and when Microsoft is green or getting bought up, that's probably pretty bullish for the overall market, and then vice versa. And bottom line is Microsoft has opened higher and been sold off all morning, and that to me is a little bit of a sign of some concern. Obviously, it could get bought back up by $2 here today and be a nice little breakout above 111. But I do think it has switched here from Apple to Microsoft, because of the events of this weekend in the market, now kind of going and shifting from defensive to, hey, where do I deploy cash? Do I go into safety or do I go into more aggressive situations? And fund managers are going to have that decision to make throughout the course of this week and in through the rest of this year. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.